Bitcoin is a revolutionary digital currency that operates on a decentralized peer-to-peer network, meaning it is not controlled by any central authority like a government or financial institution. It was introduced in a white paper published in 2008 by an individual or group using the pseudonym Satoshi Nakamoto and launched as open-source software in 2009. Bitcoin marked the birth of cryptocurrency and blockchain technology, igniting a global movement towards decentralized finance. At its core, Bitcoin functions as a digital medium of exchange, allowing users to send and receive payments without the need for intermediaries such as banks. Transactions are verified and recorded on a public ledger called the blockchain, which is maintained by a network of computers known as miners. These miners use computational power to solve complex mathematical puzzles, securing the network and validating transactions in exchange for newly created bitcoins and transaction fees. One of Bitcoin's most significant features is its limited supply. The total number of bitcoins that can ever exist is capped at 21 million, making it inherently deflationary. This scarcity is built into the protocol through a process called halving, where the reward for mining new blocks is reduced by half approximately every 4 years. As a result, Bitcoin is often compared to gold, with proponents viewing it as a store of value and a hedge against inflation. Bitcoin transactions are pseudonymous, meaning they are not directly tied to the identities of the users involved, but are recorded on the blockchain for public scrutiny. While this offers a degree of privacy, it also raises concerns about potential illicit activities. However, with the development of blockchain analytics tools, it has become increasingly difficult to remain completely anonymous when using Bitcoin. The adoption of Bitcoin has grown rapidly since its inception, attracting investors, businesses, and individuals seeking alternatives to traditional financial systems. Major companies such as Tesla, MicroStrategy, and Square have invested significant sums in Bitcoin, while a growing number of merchants accept it as a form of payment. Additionally, institutional interest in Bitcoin has surged, with hedge funds, asset managers, and even some governments exploring its potential as a hedge against economic uncertainty. Despite its popularity, Bitcoin faces several challenges, including scalability issues, regulatory scrutiny, and environmental concerns related to its energy consumption. The process of mining requires vast amounts of electricity, leading to debates about its sustainability and carbon footprint. Efforts to address these issues are ongoing, with proposals for more energy-efficient consensus mechanisms and the development of Layer 2 solutions to improve scalability and reduce transaction costs. In conclusion, Bitcoin represents a paradigm shift in the world of finance, offering a decentralized alternative to traditional currencies and payment systems. Its innovative technology, limited supply, and growing adoption have captured the imagination of millions worldwide, sparking a new era of financial innovation and empowerment. However, its future evolution will depend on overcoming technical challenges, regulatory hurdles, and environmental considerations to realize its full potential as a global digital currency. Making money with Bitcoin. Bitcoin can be approached in several ways, but it's essential to remember that it involves risks and requires a good understanding of the market. Here are some common methods: investing, buying Bitcoin and holding onto it in anticipation of its value increasing over time. This approach requires patience and a long-term perspective. Trading, buying and selling Bitcoin frequently to take advantage of price fluctuations. This can be done on cryptocurrency exchanges and requires technical analysis skills. Mining, using specialized hardware to validate transactions on the Bitcoin network and earn newly created Bitcoins as a reward. However, mining has become increasingly competitive and resource-intensive. Staking, some cryptocurrencies, including certain Bitcoin derivatives, allow users to stake their coins to help validate transactions and earn rewards. Arbitrage, taking advantage of price differences for Bitcoin on different exchanges. This involves buying Bitcoin on one exchange where it's cheaper and selling it on another where it's more expensive. Providing liquidity, participating in decentralized finance, DeFi platforms, or centralized exchanges by providing liquidity to trading pairs involving Bitcoin. In return, you can earn fees or rewards. Investing in Bitcoin-related stocks or funds. Instead of directly buying Bitcoin, you can invest in companies or funds that are involved in the cryptocurrency space, developing Bitcoin-related products or services, building and launching products or services that cater to the Bitcoin market, such as wallets, exchanges, or educational resources. Regardless of the method you choose, it's crucial to do thorough research, understand the risks involved, and only invest what you can afford to lose. The cryptocurrency market can be highly volatile, and prices can fluctuate significantly in a short period. Additionally, staying updated with the latest news and developments in the cryptocurrency space can help inform your investment decisions.